Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Home Depot reported first quarter fiscal 2023 results earlier this week, and there was a big reaction from the market. I think it was really interesting to see what happened yesterday and then today. I'm recording this midday on Wednesday, so the stock has recovered a little bit, gained back basically all of the losses that came on Tuesday after results. But if you take a long-term view of Home Depot, this company is actually performing a lot better than it was just a few years ago, but the market doesn't seem to be giving it credit for that. So I want to go through exactly what's going on with the stock price, what happened with earnings, and then what I think about the future for this company. My name is Travis Hoium. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content, and let's get right to the results. I do want to start with the stock price because I think this is an interesting context for the results that we saw earlier this week. The stock trades at about 18 times earnings, you can see here. And over the past year or so, it's basically gone nowhere. If we go back to early in the pandemic, so late 2020, it's again basically gone nowhere since then. Since slightly before the pandemic, it was trading at about 245, so a little bit of gains there of about 15 or 20% in the stock since before the pandemic started, so a little over 3 years ago. That is the context with which I want to look at these numbers because we're starting to see revenue decline, but we need to take a longer view than just what happened in the most recent quarter. So let's get to some of those results. You can see here that they reported $37.7 billion in revenue for the quarter, down 4.2% from a quarter ago. Comparable sales, which is always what we want to see growing at any sort of retailer, down 4.5%. That was kind of the alarming number to investors, especially given the fact that sales were worse in the US, down 4.6% from a year ago. On the bottom line, we get similar results. Net income, $3.9 billion or $3.82 per share, down from $4.2 billion or $4.09 per share a year ago. But this is where management really put this into context. And this is how they started the conference call too. Sales grew $47 billion or 43% in the prior 3 years. So the pandemic really had an impact on growing sales really significantly for Home Depot. What we're seeing now is the lagging impact of that and sort of getting back to more of a normal level of revenue and growth. That's why revenue was down in the first quarter. You can see that they're expecting that to be the case for most of the rest of the year as well. Sales and comparable sales down between 2 and 5% for fiscal 2023. Operating margins still going to be pretty impressive at about a little over 14%. And earnings per share down about 7 to 13% from a year ago. So what's exactly going on at Home Depot, and is something broken about the company? Well, I think the answer is absolutely not. A lot of what's going on is really a macro impact on Home Depot itself. We've seen that home builders have started cutting back on building new homes as interest rates have risen and people are buying fewer homes. There's just less volume going through the system. Home Depot said that a lot of the renovations that are going on are getting a lot smaller in size. So if you think about early in the pandemic, there's a lot of people doing major renovations in their homes. And then there was a huge backlog for that. So there was a lot of work that was left to be done in 2021, 2022. And now that we're into 2023, we're seeing that some of that spending is starting to pull back. People are still doing projects, but they're much smaller projects in scope than they were just a year or two ago. That's going to have an impact on comparable revenue and earnings compared to a year ago. But if we look back a few years, you can see that revenue is still up really sharply, and this is a much bigger company than it was just a few years ago. I think the stock is trading at a fairly reasonable valuation at under 20 times earnings. I would like to get it a little bit cheaper, given the fact that revenue is on the decline, and that may be something that'll last for a couple of years. But at the end of the day, we have to think about whether this is a company that's going to be disrupted going forward, or whether this is going to be just sort of a blip on the long-term story for Home Depot. And I think this is going to be a blip, whether that lasts 1 year or 2 years. I don't think we know yet. But a decade from now, I think people are still going to be spending a lot of money at Home Depot doing their home improvement projects. And that's what we want to see for investors, is that long-term growth. I'm not necessarily concerned about one quarter. I'm concerned about what is the long-term trajectory of this company. And I think it's still really solid. May not be quite as bright as it was a quarter or two ago, but some of that revenue is absolutely one-time in nature. So what do you think of the results? Leave your comments in the comment section below. Don't forget to follow Rive Investing. Thanks for watching, everybody. See you here next time.